Hello, guys. This is Thomas from Finate, and welcome to another recap. So, today a big down move for the S&P. The session is not closed yet. We still have like 8 minutes or so, and I did two shorts today, which was the, of course, the better side of the market, and they worked pretty well. None of them reached my original target. Well, maybe one did. We'll talk about that in a minute. Uh, Surely I left some money on the table, but we'll also talk about why I did it. So, my first trade was in CCL, and CCL had a nice setup under 1650, give or take. And I entered a little bit earlier once I saw that CCL is really selling off. So the initial move was from 17 to 1730, left a topping tail, and then did a little consolidation at the break of 1680. So that's where I entered, and then I exited the first half at 1657, I think, and the remainder down there somewhere around 1633, I think. So let's dissect that trade a little bit. So the first area, uh, the 50, the 57, was at the lows of the previous swing low. If you can see here, let me put an arrow there. That was my concern. So yeah, had I known that the overall market was gonna go really downwards, of course I wouldn't have exited. But that's a hindsight, so you never know. So it is wise to manage your trade properly, and also the steeper the drop is, the you can imagine the stock like a spring. So the more it compresses, the faster it compresses, the more power it then has to the opposite direction for a really swift pullback. So that was the concern here, and also you never know when the S&P is gonna reverse. You have some bias for coming to the session, but you can never be 100% sure. So that's why I decided to take some off right there, and then the 1630 area was my original 2 to 1. So in total, I got just over 1.5% on that trade. So really pretty happy. Of course, you then had the possibility of adding right around here at 1620 or 1615. Again, this, in hindsight, this is a clear cup and handle formation. I really feared that the market was under so much pressure that it would take a little for it to jump back up. And so, with this second possible trade, my stop loss would need to be either here, and then the 2 to 1, it would maybe work, but overall the market has already done some pretty good range for the day, and that would be pushing my luck. So that was the first trade, and the second one was in Delta Airlines, and this was a little bit later, when it formed a really nice consolidation around 28.04, and I decided to enter at the break of 28. So my risk to reward was a little bit worse, but also I had the extra confirmation of the market breaking the whole number. And this one is more interesting because of the SPY. So if you look at the 15-minute here, the next possible support was around 27.40. So then you have the half number 27.50, right? So this was a reasonable area to aim for the closure of this gap, which I believe has never been closed yet with this price action. And so this would be a logical support. And it coincidentally, for 2 to 1, I needed about 27.35. And so I put my orders at 53 and 35. But then if I show you the S&P at that time, you can see here there was a big drop under 306, which in delta was this area right here. And you you can compare the two directly now, and you can see that while the S&P was making new lows, delta was really struggling and making consolidation, really not wanting to go past 2780. And that's where I started to get a little bit worried. So my stop loss was around here, above those stops. So my stop loss was never compromised, but I really didn't like the way it traded, because all it took was the S&P to reverse to the VWAP, for example, and my trade would be gone. So I decided to cash in my profits earlier than I originally anticipated. And I believe I exited at 72 with the first half, and then seeing again as the S&P really plummeted and delta didn't really want to come down, I got rid of the second half at 62. Of course, then now in the hindsight it got as low as 27, so that would have been a huge profit. So with the entry at 27.99, let's see, give or take. So the risk to reward would have been as high as 2.9, but this is the ideal world which we don't live in. And now comes the time where I explain to you why I didn't trust this move lower for the S&P. So I got only 1 hour from that trade. At the end, profit is profit, but stay with me. Reason I didn't trust the market very much is that you have this big dropping days of more than 2%, really, they are not that uh, they are not that common. So you have one today, then you have one here, 11th of June, then 12th of May, then maybe here, but this was supposed to be an update. So, you know, it's really great if you make extra money on days like those when you really trust the market and just ride the wave. But also, those days, they make up like maybe 10% or 5% of your everyday trading. So I wouldn't, my take on that is, uh, you are better off focusing on your standard, so-called standard trades, and be profitable in those than to rely on huge gains on days like those. And it makes sense also from the perspective that you cannot train for those kinds of moves very often, because the market gives you an opportunity, what, like twice a month maybe. So I was already really nicely green for the day. I just added another percent, you know, really happy with that. At any point during those times, the spiders could have reversed, and I would be left with nothing. So, you know, it's always a give and take. And with my approach to trading, I did what suits me the best. So, hope you guys profited on this market drop as well. And I will see you in the next recap.